Senate Banking Committee's top leaders have released the broad outline of mortgage Fannie and Freddie Mac, leaving the question, what will the nation's future housing finance system actually look like? Joining me right now, Connecticut Democrat Representative Jim Hines. He wanted to wind down the housing giants long before this bill came out. You've been talking about this for quite a while, Congressman Hines. Why do we not need a Fannie and Freddie in the system, in your view?
Well, it's important to be clear about what we're talking about. We certainly don't need a Fannie and Freddie that are guaranteeing at this point something like 90% of all residential mortgages. Obviously, the private market can play in a much larger way than it is playing today, with the government, of course, backstopping those entities. So you've got a whole bunch of different proposals out there. Our argument, and as you may know, Congressman Delaney have put forward a proposal for a new structure that our idea is that you need the government in there for its scale and for its size, and to be there when the housing market falls apart, because the private sector won't be there, and you probably need it for reasons of affordability and other things. But what you really ought to do, at least according to our proposal, is make sure that you are pricing the guarantee using the private market to price that, because at the end of the day, it's the market that best understands risk and that will best price the exposure that the government has in guaranteeing these 30-year fixed mortgages or whatever it might be.
Yeah, you're trying to introduce a little market discipline into this. However, the real concern, Representative Hines, is that if you don't have a Fannie and Freddie there, if you don't have a government backstop, you're running the risk that your average homeowner is just going to get decimated by this, because there will not be as big a market for loans, or if there is the market for loans, it's going to cost everyone more to get the loan in the first place. So what does this do fundamentally to the American dream?
Yeah, no, your point is exactly right, and that's why our proposal, as well as the proposal that just came out today or yesterday out of the Senate, the Johnson-Crapo proposal, it does have government participation. You could have a market with no government participation. Most economists would tell you that market would only extend mortgage loans to people with very good credit ratings. The price of a 30-year fixed mortgage would probably be 2, 3, maybe 4 percentage points higher than what Americans are used to. So yeah, in theory, you can have a housing market without any government guarantee, but in reality, you know, we like the ideas we have for generations that actually mortgages should be affordable to Americans.
Yeah, but you're still reducing government exposure here.
Well, you have to reduce government exposure today, right? The government is 90% of the residential housing market today. I don't think anybody on either side of the aisle thinks that's a good idea. Look, in the House, we have a proposal that basically eliminates the government guarantee. This is what came out of the Financial Services Committee. It's called the PATH Act. You know, again, that is theoretically possible, but it would make mortgage largely unavailable to most middle-class Americans. Our proposal, as well as the proposal that has been developed over in the Senate, has a role, but a much more disciplined role for the government in this market, a backstop, if you will.
You know, not every country has a Fannie or Freddie. You look at Canada, and I've mentioned this before on the show, they haven't had quite the same problems we have had. And Europe hasn't, well, you know, they have their own issues, of course, but they hadn't had quite the housing problem that we had back in '08. You know, it seems like this comes at a cost, shall we say. Fannie and Freddie and the ability of the U.S. government to be there as the eventual backstop makes all these loans more plentiful and more available, but at the same time, do you want them that plentiful and available?
Yeah, look, and it's important to distinguish between what Fannie and Freddie did from about 2006 on, when they made, you know, just unconscionable, poorly underwritten loans, started competing for some very, very, you know, toxic, frankly, mortgages, and what they did for generations before that. Remember, Fannie and Freddie have, for a couple of generations, been there to help Americans get started in home ownership, which is how most Americans accumulate assets. So you're right, there's lots of different models out there as to how you can do this, but our idea is the key here is that the government be there, but that it's there in a disciplined way, that the guarantee that it provides is priced well enough so that when things go wrong, as they do, hopefully not like they did in 2008, but when they go wrong, there's a reserve there.
I guess, I guess the problem is that, you know, a lot of people feel it's sort of all or nothing, because the minute the government is there, there's always that temptation for the government to be there in a bigger way, that whole too big to fail argument. But to your point, you want something. So it's a challenging issue.
Yeah.
And one that we look forward to continue talking with you about. We appreciate you joining us today.
Sounds good.
Representative.